Welcome to The Explainer. It's been a really busy week in the crypto world. We saw three huge headlines pop up. One about regulators, another about a major competitor, and a third from deep inside Bitcoin's own data. Now, on the surface, they look totally unrelated, but if you connect the dots, they might just be signaling a major shift for the entire market. So that really brings us to the big question, right? Is crypto finally growing up? To figure that out, we're going to break down these three key signals that you just can't ignore. We'll look at what the regulators are up to, what a rising star competitor is doing, and then check in on the very foundation of Bitcoin itself. All right, first up, signal number one, the regulators. For years, the whole story in crypto has just been one big question mark, a real lack of clarity. But it looks like that narrative is finally starting to change because the top US financial watchdogs, well, they're getting serious. So what's actually new here? It's that we're seeing a coordinated approach. These guys are actually talking to each other. On one side, you have the SEC, which just put out a whole new agenda for crypto rules. They're talking clearer guidelines for token sales and even a potential path for crypto to trade on national stock exchanges. And the CFTC, they're not just sitting on the sidelines. They're working with the SEC on stuff like 24-hour trading rules and how to handle DeFi. This is a huge, huge shift from years of ambiguity to, okay, let's actually build a rulebook. And what's the long-term impact of all this? Well, you can think of it like a chain reaction. First, you get clearer rules. That gives the industry a path to actually be compliant. Step two, that clear path makes it way easier for big institutional money to finally enter the space. And once that money comes in, that paves the way for a whole new wave of regulated products, things like ETPs and ETFs. This could literally be the roadmap for mainstream adoption. Okay, for our second signal, we're going to shift gears from the rule makers to the builders. We're talking about ecosystem growth, and there's a new contender that's really stepping into the spotlight, Solana. This is all about how a major Ethereum competitor is making some serious moves in traditional markets. Now, wait a minute. Before we go any further, I have to make something crystal clear, because there's been a ton of confusion about this. The NASDAQ listing we're talking about is not a Solana spot ETF, not even close. That's a completely different kind of financial product, and it has a whole separate regulatory mountain to climb. So, if it's not an ETF, what is it? It's a listing for a company called Sol Strategies, and it's going to trade under the ticker STKE. You should think of this as a huge symbolic step. It's the first time any Solana-focused asset is going to be available right there on the main US stock market. This brings a completely new level of visibility to the entire Solana ecosystem. And as you'd expect, this has kicked off a classic market dynamic. The anticipation for this listing on September 9th has driven a whole lot of hype and interest. Traders have a name for this, right? They call it buying the rumor, where all the excitement and the price action builds up before the event actually happens. But, and you knew there was a but coming, as any seasoned trader will tell you, buying the rumor is very often followed by selling the fact. It's an incredibly common pattern. Once the news is official and that initial wave of excitement is over, the price often corrects. So while it's a fantastic long-term step, the short-term could get a little bumpy. All right, let's move on to our third and final signal. We're shifting gears again. We've looked at regulators and competitors. Those are all external forces. Now let's look inward, at the very foundation of the market's leader, Bitcoin. We're going to check in on the behavior of its core investors. And let me tell you, the holders are holding strong. Let's dive right into the on-chain data, because this is where it gets really fascinating. The amount of what we call illiquid Bitcoin, that's basically coins and wallets that almost never spend them, has just rocketed to an all-time high of over 14.3 million. What that means is, despite all the wild price swings, more Bitcoin is being socked away for the long term than at any point in history. And to put that number into perspective, a staggering 72% of all Bitcoin that will ever exist is now considered illiquid. It's not sitting on an exchange ready to be sold at the first sign of trouble. It's locked away by long-term holders. This creates a really powerful supply squeeze, and it's what's behind that buy the dip mentality that we've seen so much of. So if you want to track this trend yourself, here are the key things to watch. First, the illiquid supply curve. That shows you the conviction of those holders. Then there's the long-term holder spending volume. That can give you a heads up about potential selling pressure. Spot ETF inflows, of course. That's your window into institutional demand. And finally, just keep an eye on exchange balances. That tells you how much supply is even available to trade. Put them all together, and you get a really clear picture of the market's health. Okay, so we've looked at regulation, we've looked at ecosystem growth with Solana, and we've looked at the fundamental strength of Bitcoin's holders. Now, let's connect these three signals and figure out what the bigger picture really looks like. So let's boil it all down. First, regulation. The story is that the rules of the game are finally getting clear. Your takeaway? That's a massive long-term positive for institutional adoption. Second, Solana. The ecosystem is expanding into brand new territory. It might be a short-term trading event, but it signals some very real long-term potential. And finally, Bitcoin. Its foundation is just incredibly strong. That underlying conviction from its holders really supports a bullish case for the midterm. So when you put it all together, you've got clearer rules on the horizon, you've got ecosystems expanding their reach, and you've got a rock-solid base of long-term holders. It paints a pretty clear picture. This is a market that's maturing. The signals are definitely there. The only real question left is who's listening.